Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Vic Berniclaw joining us, who is a SCORE certified mentor specializing in technology and business management. Vic will present, well, I was going to say putting your business ideas into practice, but we did just recently change that to converting your, Vic, what is the title of today's webinar?
It's converting your business idea into a profitable business.
There we go. Thank you so much for that, Vic. Thank you so much all for joining us. And of course, without further ado, I'll hand it over to you, Vic.
Great. Thank you so much, Anna. Again, my name is Vic Berniclaw. I'm with SCORE. And just so you know who you're dealing with, because I always try to figure out who's talking and what's their background, what makes them so smart that they could even talk about what their subject is. So specifically what it is that I started a couple of businesses with my wife and son several years ago. We built them up to about 30 employees, about $2 million in annual sales, and turned the businesses over to our son. He has been growing the businesses ever since. And so they're his businesses now. So it's a great pleasure to see him succeed and grow as well. But I kind of wish I knew all of the concepts that we're going to be talking about when we were in business. So that'll give you just a bit of a head start. So I hope you benefit from some of the things we're going to talk about. First of all, we want to make sure that you've got your audio set to mute, your mute set to audio. You've got the fit window set up. And the questions, if you would hold the questions until the end, we will answer all of them at the end, and I'll commit to stay as long as necessary to answer all the questions, not only on this subject that we're going to present, but any subject relating to business that you have a question on. So write those down. Here is a series of contact information and reference information on COVID. COVID's kind of taken more of the back seat, but if you're interested in any of this, it's all available. Incidentally, you don't have to worry about taking a lot of notes because the SBDC will be sending you copies of these view graphs, and there are a number of them that have links attached. So I think you'll find those beneficial. We want to also highlight the fact that there is a lot of training available on SBDC. Make sure you take advantage of that. It's super. The price is really right. And be sure you take advantage of their counseling. We're going to be talking about some of the importance of that later on. So what we're going to try to do is within an hour, sort of touch on the highlights of how you could take a business idea and not only put it into practice, but how would you make a profitable company out of this? And there is three major elements necessary to do that. First of all, you have to have a business idea that the customers are going to pay for. We're going to cover that. You also have to be able to set out a plan for how you're going to convert that idea into practice. And third, you have to have a plan to do the business side of the whole operations. Certainly there is an operations side we're going to be talking about, and that's the plan on number 2. We're going to be talking about the administrative shell necessary to convert that business into an operational business as number 3. So we'll cover all 3 of those individually. First of all, let's talk about the business idea. You have to have a customer problem. Many people I talk to says, hey, I got this idea and I'm going to go out and sell it. Well, it's much easier to go out and find out what the customer's problems are. And the way you do that is by asking. So if you are a specialist in any particular area, you're asking a number of people, what are the problems you have in this particular specialty area? And once you find those problems, you got to ask, will they pay for it? If they will, then you say, can I come up with a solution to that problem? And would you listen to that solution? Of course, they're going to listen to the solution because it was a problem for them. So what you have to do is find the solution that satisfies those customers and then make sure that they buy into it. And you may have to keep changing your proposal until they say, hey, that's exactly what I need. Good. Will you buy it? Good. Give me a check. Give me a purchase order. Give me an agreement, whatever it is. And you get enough of those people lined up that then and only then do you actually go out and start your business. Too many people go out and open their doors hoping the customers will come. But the record is terrible in the sense that like 80% of the businesses, according to one study, are 80% of the startups are out of business within 5 years. So the tremendous, huge attrition rate in startups, you don't have to go that way. If you go out, just what I said, go find the problem, go find the customers, go find the solution, get enough of them lined up, start your company. You've already got it assured that you have customers coming in. And then you go on to the second two items that we have. What's the second one? Second one is planning the business. Well, there are different alternatives for planning the business. There is certainly a business plan, formal business plan, and many of you have heard of that. And for example, although our business started out in the very room that I'm giving you this webinar from, which is a small study, and our inventory room was the closet behind me, we went and moved up the chain to bigger and bigger areas until I finally had to buy a 7,000 square foot, roughly $500,000 building. And for that, the bank would only loan me the money if I had a big business plan. So I created a big business plan, give them what they want. It's about an inch thick plus, and I had a lot of addendums, et cetera. They loved it, but I couldn't run a business based on that because it would take me forever to write it, and it's constantly changing. What's the alternative? Something called a one-page lean business canvas. What is that? It is a series of steps that we're going to walk through that you can use as a one-pager to lay out the plan for your business. Specifically, the upper left is exactly what we were talking about earlier. Remember? The problem. If you don't have a problem, you don't have a business because you don't have customers. Customers will give you money when you are solving their problems. The number 2 block to the right of that is a solution. Obviously, they're going to pay you for that solution. Going on, who are your customers? You can't say everybody's my customer because then you'd have to have an infinite amount of money to go out and market to the world, which you don't have. So you've got to focus. Am I going to focus on people in Albuquerque, people in a particular part of Albuquerque? Am I going to focus on young people, old people? Am I going to focus on people in a particular income bracket? Where is my focus? And then you know exactly where to go market. How am I going to deliver that product or service? The 4th block on the top on the right. Am I going to deliver it, hand deliver it? Am I going to send it through the mail? How am I going to get it to them? The value proposition, what value am I going to provide for my customers? Am I going to make it better, faster, cheaper, for example? How am I going to provide the value that they see that they should come to me? The second block down on the left-hand side is a competitive advantage. What is my edge against my competitors? If I have no edge, if I'm doing the very same thing as my competitors, why would customers come to me? I'm a startup. They're going to go to the people who are already in business that they could trust because they're already a proven commodity. I have to have an edge. Either I'm in a particular part of town that other people aren't. I'm offering a product, a particular product that other people don't offer. I can offer it faster, better, cheaper than others. Watch it out for the cheapers, because if you offer it cheaper, you may end up running out of cash. And we're going to be talking about that later. Marketing, how am I going to reach those customers? Am I going to reach them through internet? Am I going to reach them through printed material, door hangers? How am I going to get to those customers? Think about that. Sales, who's going to do the selling? It's good to reach them, but you have to actually make the sales. They have to sign on the bottom line, or they have to be willing to pay you in exchange for the product. How am I going to make that sales? Think about that. The key resources is going to be, am I going to have people? Am I going to have a storefront? How much money am I going to have? We're going to talk about that. I have to have partners. Risk, what kind of risks? And here what you want to do is just think through what are the kinds of bad things that could happen and what would I do about it? Not that you have to do anything, but think about it so that if something did happen, you're all set to go. So think about the risks. Lower left-hand corner, what's my cost? How much is all this going to cost me? We're going to talk about that. And the next one over, revenue stream, how much is coming in to compensate for that cost structure? We're going to talk about that. A very, very important block is the lower right-hand side, success. And it's a block that we in SCORE locally added to the lean canvas that exists in many different forms. You can go online and find different forms, but we came up with this one locally. And we added this success in the lower right-hand corner because you have to have a why to be in business. Simon Sinek, if you're ever interested in going and delving into that, go on to TED, T-E-D, just Google it, and listen to Simon Sinek, and he talks about why. If you have a strong enough why, you can overcome any objection, any problem. But if you don't have a strong enough why, the first bump in the road that's going to come along, and you are out of business because it's just too tough. How can we actually create a business then? So we have a idea that's been tested with these customers, number one. Number two, we have a plan laid out, say on our lean canvas. Yes, in fact, we've got the details. Now, how am I going to bring that to fruition? Well, the way you're going to bring it to fruition is you're going to create an administrative platform or envelope to make it all work. And we're going to talk about each of those elements. So for example, the first one we're going to talk about is a company name, then organizational type, business administration, taxes, financial planning. So let's talk about company name first. If you don't already have a name, it's important to think about that particular aspect. The name could either be general or descriptive. So what do you mean by that? Well, to begin with, there's advantages to being general. So let's talk about if you had named your company Amazon or Google or Etsy, those are general names. So how could you figure out from Amazon or Google, if you didn't know the company, what in the world they did? Well, Amazon, you think they must be in South America and they must have something to do with rivers. No, the advantage to them is that they can do lots of different businesses. So for example, if Amazon had started out as they did in books, they could have called themselves National Book Company and sold books. The problem is that when they wanted to get into another business, then they'd have to have a different name. So they call themselves a general name. And so the advantage is that flexibility. The disadvantage is they have to spend a lot of money getting you to understand what Amazon does or what Google does. And when they spend that money, that embeds that subject or that name in your mind, and you're all set. If you're a descriptive, I'll go back to just a second. If you're descriptive, then that tells you exactly what you're doing. So you say Roto-Rooter or MasterCard or Home Security Systems. All of those are descriptive and they tell you exactly what they're going to do. So they don't have to spend a whole lot of money because you know all right from the name. The disadvantage is that if you want to spread out and do other things, and in our case, we started out with something called Home Security Systems. And then the people said, now come on down and do our security system for our business. Well, we didn't want to have that kind of a sticker. So we had to come up with a second company, which we called Industrial and Commercial Security Systems, another descriptive name, but again, it limits you to what it is. So there's advantages and disadvantages in either a general or a descriptive name. We'll make sure that no one else is using that name, and we're going to cover that topic. Let's talk about organizational types. What kind of governance would you have to have? One of which is, first of all, is a sole proprietor. Sole proprietor is the easiest one to do. The business and you are one and the same. You can use your social security number for your taxes. It's very, very easy. The disadvantage is that should somebody sue you because they tripped on a rug in your business or whatever, they sue you, they can sue the business. They can sue you personally. So if you have equity in your house or in your car or your 401k, and the judge agrees, yes, a judgment is appropriate, they can get access to all of those. So the disadvantage of a sole proprietor is the poor protection, in a sense, from liability. A partnership is no more than a sole proprietor with more than one partner, or more than one person. Advantages of a sole partnership is that you can split the load, you get other capabilities involved. The disadvantage is it's the very same liability protection. You don't have any liability protection, and you even have more liability problems in the sense that any of the partners who spend money thereby in debt the other companies, unless you have a special kind of arrangement to try to protect you. If you get a partnership, I recommend you have a partnership agreement so that everybody knows exactly what you're doing and there isn't a hassle. Wait a minute, I thought you were going to do this. No. So have that partnership agreement. The one that helps limit the liability is called an LLC. And of the people we talk to, probably about 90+% go the LLC route. It's easy to do, $50, and you are one. We're going to talk about that in real detail since that's a major thrust. If you want to sell stock in your company, you need to think about something called a subchapter S, in which case we recommend you go to a lawyer and set that up. But under that arrangement, you can sell the stock. So for example, you want to sell 10% of the company to Uncle Joe, and he's going to give you $10,000 for it. Well, there's your $10,000 to get started, but Joe's got 10% of your company going forward. And then you have all of the obligations associated with stockholder meetings, board of directors, et cetera. C Corps, you may have heard of, that's really for the big company, the General Motors and the General Electrics of the world. And that's really heavily involved and probably not for startups. How do you form an LLC, since that's the major thrust? Got to have a name. Okay, and then we're going to talk about each of these. We're going to talk, you got to have a registered agent. You got to have articles of organization, optional or operating agreement, and like I mentioned, optional. So we're going to talk about each of these. Let's talk about the LLC name. The name you have to have that you pick and you get the registration for. You make sure you use LLC or LC or L.L.C. or L.C. after the name to make sure that people recognize that it is an LLC to help you maintain that liability protection. You make sure that nobody else has got your name before you go register for the LLC by going to this particular link and click on business search and just put in, I want Holiday Arts. And they say there's no such company. Well, then you know you can go ahead and use Holiday Arts. But if they give you the information on Holiday Arts, you know somebody else has that, so you can't use that. You have to go pick another name. That's the way you make sure that you're not picking a name. Appointing a registered agent, it throws some people for a loop. Everybody who has an LLC has to have a registered agent for service of process. What's that mean? That the individual or business entity who will accept legal papers for the LLC. You cannot use a PO. It has to be a physical address. You can be your own agent. You do not have to pay somebody to be that agent. 99% of the people are their own agent. There are a few people says, I'm not about to give them my mailing address. I'll go hire an agent to get all the papers and to give them to me. But that's your option. Just has to be a physical address, not a PO box. Articles of organization, that's what you fill out online when you apply for your LLC, and we're going to give you the link of how to get there. But you have to put in the LLC name, which we've talked about, the effective date, the period of duration, whether it's perpetual or which almost everybody uses perpetual. But if you said this is only going to be something that's going to last for 3 years because this is I'm doing a construction project, and the construction project is over in 3 years, therefore that's all I need the LLC, then you put in the term of use. If it's a general purpose, leave it blank. You got to put the name and address of the registered agent that we talked about, the phone number of the LLC, as well as the address of the LLC is optional. The principal place of business, if the mailing address is different, whether it's going to be run by a manager or about members. So if you're the member, are you going to run the company, or are you going to hire somebody to run the company for you? In that case, the state wants to know who's that manager. If it's just one member, you got to show that, or if it's multiple members, you have to show that. Name and contact of the organizer, that's you. And then something called an EIN and a NAICS code. And what in the world is that? Well, it turns out that EIN for the IRS is the employer identification number. And a recommendation is that you go ahead and get that EIN early on, even if you don't have the employees, because when you go to get a checking account, some of the financial institutions require you to have that EIN number. It's free. We're going to talk about the link and how you get that. The NAICS number is a North American Industrial Code System. And all that does is it just says, my particular business is a code number, blah, blah, blah. And you look that up on the Department of Commerce. You can either do that ahead of time before you get your LLC and just Google NAICS codes. It'll get you to the Department of Commerce. You'll search the numbers and find whatever NAICS code best fits your particular business. If you start in on the LLC process, you get down to that place, they will give you the link. You can jump out and get it, bring it back, and then go ahead and continue on. So either way. Articles have to be filed online, and we're going to give you the link on that. And the filing fee is $50. Almost everybody pays for it with a credit card. If you want to pay for the check, you got to send them the check ahead of time and make sure everything's all set. Okay, operating agreement is optional. Operating agreement is advisable though, because it says how you're going to run the business. How you're going to run the business includes, where am I going to be at? What am I going to do? But a big thing in that area is you've thought through what would happen in your demise. You flunked the bus test. Something happens to you tomorrow and you can't run the business. What do you want somebody to do with that? You want them to sell the business? You want them to close it down? Is your spouse going to run the business? A friend of yours? Whatever it is, that's in your operating agreement, basically how you're going to run the business. But it is optional. You do not have to file it with your articles of organization. You write it up and you put it in your own files. To form an LLC in New Mexico, you go to the Secretary of State and this website and click on it, and you're on your way to fill out the articles of organization. If you're saying, well, I'm not too sure about this, just you go to the bottom of that website, and they have a tutorial. It's a video, very nice tutorial. You can walk through it ahead of time and see exactly how to fill it out so they hold your hand. Let's talk about business administration. First of all, you need to have a checking account. Why do I need a checking account? Well, it turns out that, remember we talked about the liability thing? If in fact you had an LLC and you said, well, the company needs a few more dollars, so I'll take some dollars out of my pocket and put it in there, or I'm going to lunch, so I'm gonna take 50 bucks out of pot and go. It's what's called piercing the corporate veil. So somebody that sues you, you've lost your liability protection because you and the business are one and the same. And if a judge says, yep, you're one and the same, they pierce the corporate veil, then your house, your car, your retirement, all that is liable to be passed on if the judgment is awarded by a judge to the successful litigant. So make sure you treat your business as a business, and you always run all the money into the business through the checking account, and all the money out of the checking account, out of the business through the checking account. And you have a record that you're treating the business on an arm's length of relationship, and it is in fact a business standalone. Recommend you get a website. Why? People you're going to go to are going to say, I don't know if this can fly by night outfit, but when you give them your business card and it has www-whatever, they're going to go take a look. So they need to have a website. You can do that very simply. You can go online and you can find free software to create a one-page website where and once you start getting broader and multiple pages, et cetera, then you're going to have to start paying for the software. But to begin with, it's free. So get a website, get it hosted, and you are identified. What are you going to leave when you're talking to people? Business cards, obviously, we all know about it. Recommend you think about it, something called a trifold, which is any kind of a folder, any kind of a pamphlet. And a trifold is no more than just an 8 by 11.5 folded in 3 pieces. You've seen them all over the place. You say, well, how am I going to generate that? You can go to Microsoft Word, and they have all sorts of formats that you can generate, get it printed, preferably in color, leave it with your people, because later on they're going to say, who was that came by? Oh, here's this trifold. I see what they're doing. Okay, you want that. Insurance, only get insurance for those things that you cannot personally afford. If you can afford it, don't buy insurance, because you have to pay the insurance company to do the very same thing plus their overhead. If you can't afford it, then in fact, you want to buy insurance. So for example, when we started a business, what we bought was liability insurance, because we couldn't afford somebody suing us for $1 million. And so we bought liability insurance. If you have a lot of property, you may want to think about property insurance, whether it's trucks or vehicles or offices, et cetera. Pricing. How am I going to price my product? Well, a lot of people price their product based on what's called a markup. So it costs me $1. I think I'll mark it up 50 cents, or mark it up 30 cents or 80 cents, or double it. A lot of people just double the wholesale cost to me and then sell it for that. One of the things you want to do is go check your competitors. What are your competitors selling it for? Because if you say, I'm going to sell this dollar item for $2, and your competitors are selling it for $1.50, you're going to have some special kind of arrangements with these people to show them it's worth the $2. When we were in business, we actually went out and sold the product for higher than some of our competitors did, because we showed them the increased value to them of what we could provide, whether it's timeliness, completeness, better product, higher quality, warranty, whatever it is. Price is corollary to the picture in the mind of the customer. License permits, go online, Google your industry, because every industry is different. If you're in the construction industry, they're going to send you the construction industries division here in the state. And you have to have a construction license to do that. If you're in construction, you want to do a job anywhere in town, you got to have that town's permit, whether it's a city permit or a Bernalillo permit or a Las Lunas permit, it's locally derived. So if your work is permit or license, check that out. A lot of them are not. Taxes. It's a bugaboo of a lot of folks. What are taxes? Well, it turns out that we have to register for the taxes. And the way you register is what I mentioned before. For the federal government, you get an EIN number. Here is the link to that. And there's a tutorial for that on YouTube. You can just go on the YouTube and it'll walk you through the whole thing of getting an EIN number. Very easy. It's free and recommend you do that. You also will have to, if you're doing business in the state, get what's called a BTIN number. Used to be called up until July 1 of last year, a CRS number, a combined system, combined registration system. And now the BTIN is a business tax identification number that you have to be able to pay your gross receipts tax. Gross receipts tax in this state is what sales tax is everywhere else. The reason it's called a gross receipts tax is that as far as the state is concerned, they could care less where you get the money, but you're going to pay it. So for example, I do a little bit of consulting and I don't charge them the tax. I just charge them a flat rate. So I have to take the tax out of my pocket and pay it, but you have to pay the tax. So go get that BTIN number and then we'll talk a little bit about that later. Payroll taxes is the Social Security and the Medicare that you're all familiar with if you've had a job where you have paid half and the company has paid half of that. You've paid the 7.65, I'm sorry, and the company's paid the 7.65. But if you're alone and you are self-employed, you're going to have to pay both halves, although you can take one half off as a tax deduction. Federal and state unemployment. If you're in business, you are paying what's called FUTA and SUTA for federal unemployment tax and state unemployment tax. Very small amounts. Recommend you talk to your accountant about that. And it's just filling out some paperwork and a small check. But it's for people to pay for their unemployment. The payments, federal income taxes, is basically paid at the end of the year unless you have enough money coming in. And then it's paid quarterly, same way with the state income taxes. The gross receipts tax, when you register for your BTIN, you're set up ahead of time with them. Is it going to be paid monthly, quarterly, semi-annual, et cetera? Recommend that to begin with, you pay it quarterly. And when you get enough money coming in, then they're going to say, wait, I want it monthly. In fact, if you get a whole bunch of money, they'll insist you pay that weekly. So they want their money. It's the gross receipts tax. The problem with the gross receipts tax is that they'll send you a whole sheaf of papers and you have to collect it based on the community in which that service or product is delivered. So the rate for Albuquerque is different for the rate for Las Lunas, for Bernalillo, for any other community, Santa Fe, et cetera. So you have to figure out where did I deliver that and charge the right amount. And then you remit that to the state based on whether it's quarterly, monthly, et cetera. Tied to the particular community that you provided that service or product. If that's confusing, make sure you just sit down with your accountant and they'll walk you through that. Local property taxes you're all familiar with if you own a home or any property that you pay every 6 months on that. The BTIN number, we talked a little bit about, it's the identifier from the state for your gross receipts tax, and you have to have one if you're doing business in New Mexico. And as I mentioned, the seller is going to pay it. Recommend almost everybody collects it from the buyer, but you're going to pay for it one way or the other. The rate based on the locality I mentioned, and here is the BTIN portal, again, that you can go to make sure you get that BTIN number. Okay, let's talk a little bit about financial planning. Planning can be accounting, which is questionable. Why do you need a plan? Accounting. Well, you have to have the accounting in order to keep score. Am I making a profit or am I not? In addition, you have to have the accounting to pay for the taxes. So you have to have accounting. There's just no way around it. There's something called a chart of accounts. Now, what the dickens is that? That is the different boxes that you're going to keep collecting the financial information. So whether it is utilities or rent or whatever, you're going to have a box for that. Now, you got to decide for your business, what kind of boxes do I need for my revenue and my expenses for products and services. So you could just get away with just one box. It's called revenue. All the money that comes in just gets dumped in that box. Very simple, easy to do. The problem is you will not know whether you're making a profit or a loss from different things. So when we were in business, we had a different account for sales, for lease, and for service. And then we had others both on the income revenue and on the expense side. Then we also broke it out for different major product lines because we wanted to know what kind of profit and loss we had. So for example, on product line A, maybe we're making a lot of money, but we're losing money on product line B. Well, you won't know that unless you keep the accounts separate so that you could know. And if you're losing money, then you got to say, can I raise the price on this? Can I adjust it? Can I change it? Or do I want to drop it so I avoid the losses? But you won't know that unless you have the accounting set up to give you that information. Revenue expenses, the major items, what's coming in and what's going out. And you want to make sure that you try to get the stuff coming in more than stuff going out. Otherwise, you're going to run out of cash. We're going to talk about that, how much cash you have to have, because most businesses, when they get started, actually are negative to begin with. And so the expenses are more than the revenue to begin with, but you want to get to break even, or when those are even, as soon as possible. That's called profit and loss. So you want to make sure that you get your profit, revenue greater than expenses, as opposed to expenses greater than revenue, which is a loss. Get lined up for credit cards. Go get a merchant account early on because people are going to pay you with credit cards, and you're going to want to pay. You want to accept those credit cards, and you can decide which credit cards you're going to accept. Others, some are more expensive than others, but at least the basic Visa, MasterCard kind of arrangement. Some people will add Discover, American Express, but that's up to you. But the basic ones, think about getting those because people are going to pay you oftentimes with credit cards. Let's talk about financial documents. Here is a very, very simple income statement, or what is called a P&L, profit and loss statement. It's a P&L or income statement covers a period of time that is by quarter, by year, by month, whatever you want, but it's for a period of time. So for example, this is broken off by year. So in year one, here was the revenue. They set up the cost of goods sold. So they took out that right away, and credit card fees to come up with a gross profit. You could just leave it as gross revenue. Operating, you can set up these depending on your chart of accounts, however many you want to break out to get to operating profit. Operating profit says what came in and what went out are the major determinants of my operating profit. Now, the things that come after that are administrative things. So if you ever run across a term called EBIT or EBITDA, you can be very smart in saying, oh yeah, I know what that is. EBIT is earnings before interest and taxes. Interest and taxes. So EBIT, this operating profit, here is EBIT. You may also run into the term EBITDA, which is earnings before interest, taxes, depreciation, and amortization. They don't have that on here, but that would also come into this area to come down to net income. That's your bottom line, what it is you get to keep. So this is all of the in, this is going out, this is administrative expenses that are income, taxes, it could be depreciation, amortization, to come down to here, there's my bottom line. That's what I actually make. So this is an income statement. Next, let's talk about a balance sheet. A balance sheet is no more than a snapshot of what the financial health of my company is. On the left is assets, that is what I own. On the right side, what I owe, and what I have as the difference in equity. That's what I have. And to begin with, you put some money in, and it's going to show up as, say, $10,000 is the amount of money you put in. And over here, it's going to show as an asset as cash. because these two numbers have to be equal. That's why they call it a balance sheet. Assets equals liabilities plus equity must equal. So that's part of the double entry bookkeeping. Okay, budgeting. Budgeting is no more than looking ahead, just like that P&L statement we talked about looks backward. Looking backward says, here's my history. Here's what I actually had coming in and what's going out. Budgeting is the very same thing, but looking forward in projecting. So we're going to project revenue. We're going to project sales. We're going to, in other words, what kind of cost, revenue, sales, and cost. So I'll know whether I've got a profit or a loss. Then from that, I can define how much do I need to have in the way of money before I actually get started. So let's talk about a real simple form review. Really simple, just to show you the illustration. Okay, to begin with, we'll say that I got no revenue coming in January, but I had these kind of costs for labor, utilities, phone, etc. So I had $130 that I put out in the first month. Second month, I actually had some money coming in, about $100, but I still had, this month I had $160 in expenses. So where in the first month I had $130 loss, remember 0 minus 130 is a minus 130. 100 here minus the 160, so I had a loss of 60, which added to the 130 means that I'm in a hole 190. Third month, I got 200 coming in. Oh, great, because my expenses were only 180. So that means that I'm at break even. In other words, my money coming in is greater or equal to the money going out. I'm at break even at that point. So here on, I'm a profit. So in fact, the 200 minus 180 is $20 in profit. So my 190 that I had was in the hole is now 170 in the hole. As you go along, you're projecting your revenue, your expenses, and your profit or loss. And you see that by here in June, I've already made a net profit for everything. But I had to have $190 in hand before I started the business, because if I didn't, I wouldn't be able to pay these bills in February. And if you can't pay bills, you're out of business. It's called bankruptcy. So this is a way that you can set things up to find out how much money am I going to have. And when you want to do this, make sure you add in a little contingency in here. Say, oops, there may be some things I forgot. So the 190 probably should be maybe 250 or whatever you decide as it added to give me a little bit of pad. But this is the way you can determine how much money you're going to need to start. Now, the big question is, what kind of revenue can I expect? If you did what we talked about in terms of talking to customers, and they say, yes, in fact, I'll buy from you, you have a much better shot at knowing what kind of revenue you're going to have. It's likely that you're going to forget all the expenses. So oftentimes this number down here needs to be inflated. And I've gone talk to people and I said, yep, that's exactly what their experience was. Okay, where am I going to get the money? Well, to begin with, there's something called an Inc. magazine. And Inc. magazine is a magazine for small business. INC stands for Incorporated. And they interviewed the 500 fastest growing small businesses in the country. And they asked the CEOs, the presidents, where did you get your money to start with? By far, 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 the majority of these people got their money from savings, friends, and family. It was internal money. It wasn't from the bank. It wasn't from investors. It was internal. Now, I'm not suggesting that you have to do it that way. I'm just suggesting that by far the majority, remember, these are the fastest growing companies as well, got their start internally. There is something called crowdfunding that you could have access to. In other words, what you're doing is you're going out online and advertising your company and saying, hey, how would you like to give me some money for my company? And I'm going to give you a free sample or a free product. And if they're enamored with your company, they may actually do that. Or there is now an allowance for where you can sell equity in crowdfunding. But for all of these, you have to have an agency that you work with that is the front to go online and do that for you. It takes a tremendous amount of time. I've talked to people and they have said that it could take like 2 people full time for a couple of months to really get this set up. but it's still an option for you. If you want to go that way, you can start investigating. Sale of equity. If you had started, remember when we were talking about organizational types, if you had set up a subchapter S, you could sell equity. You could sell stock, not only to Uncle Harry or Joe or whatever. There is some restrictions in terms of the number of people you can sell it to, but you can do that and legitimately, and they then own a piece of the action. Now, the thing to be careful of is as soon as you sell 51% of the company, those stockholders can get together and just say, you're fired, because the stockholders call the shots. And if 51% says, I don't think you're the best man to run this thing, we're going to go get somebody else, you're out, even though you started it. There are lots of instances of that happening. So when you sell equity, there's some downside as well as the upside. The upside is if you can get the money and you start your company with that and get it really rolling, a small piece of a big pie sure beats a big piece of a small pie. So it's still a consideration. Loans, banks are not interested in loaning to startups. If you decide, hey, I'm going to have a loan anyhow, think about having to have a lot of collateral. If you got a lot of collateral, got a lot of equity in my house or a lot of equity in my savings account or whatever, you may be able to convince the bank, yes, in fact, give me that loan, but they're going to loan it to you against that collateral, not against your business. But they'll have you put everything up for collateral for that loan. So if you do decide to go the loan area, be sure you take a look with the SBA guaranteed loans. They are a good arrangement. It's still through the bank, but the banks are very apoplectic about risk. They really hate risk. And the SBA will guarantee the loan up to 85%, depending on the amount. And they charge you a small insurance fee in a sense. So they're like an insurance agent with the bank. But if you went belly up, they will guarantee that portion of the loan to the bank. So then the bank is more convinced, yep, then I could go ahead and take that risk. On your team, who should be on your team? To begin with, you really need an accountant. When we first started business, we didn't have the money to pay a CPA, so we got a bookkeeper. The bookkeeper helped us in getting things set up. We did go to a CPA to set up our chart of accounts, but beyond that, the bookkeeper took care of us for a few years, and then when it got a little more complicated, then we got a CPA. But you need an accountant to help you, especially with taxes, because the darn taxes keep changing all the time. Lawyer, think about a lawyer when you need one, not until you need one. When I was in business, I only went to a lawyer when I wanted to check something for its legality. I never went to him and said, what do you think? Or can you generate something? That's too darn expensive, not $300-400 an hour. So what I would do is come up with a draft contract and give that to them and say, review this for applicability of and consistency with state law. And they would do an assessment and they tell me. Same way if you're going to get a lease, make sure that you review the lease, but then take it to a lawyer to make sure that there isn't any shenanigans in the lease. A banker, think about once you're in business to get what's called a loan from them on an operating basis, an operating loan whereby, and we had them whereby if we had a slight glitch and we needed the money for today and then we could pay it back next month, you had an option of getting a short loan. So you could go to the banker, have a relationship with that banker. What we did was I would drop into the banker every 3 months, 6 months. I'd say, hey, I don't need any money, but here's where we're at. Here's what's going on. Oh, it's going great, et cetera, whatever. He was great. And then when we got a really big job, a job out here, I went to the bank and I said, hey, I need this and way more than I've ever considered. They said, okay, no problem, because I had a relationship with that banker. So think about getting a banker and then having a relationship with them. They're going to want to have your checking account with them. They're going to want to have you banking with them, using their services. And once you create that relationship, when you need a loan, then they're going to be a lot more willing. Insurance agent, when you need insurance. If you need insurance for liability at something, have a relationship with an insurance agent who is a business insurance agent, not a home insurance, but a business insurance agent to get you the best deal on business insurance. A really, really big thing you ought to have on your team is either your counselor or a mentor. Why? Those people have been through the traces. They've been there, done that. They've worn out their kneecaps in front of bankers like I have. They've hit the potholes in the road. There's no sense in you're hitting those same potholes. Get advice in terms of where the potholes are. Putting it all together, we've covered a lot of information through the whole process here. We've talked about how you're going to get it together. And the way you do that is set up what's called a schedule of events. And I'll give you an example in a minute. What needs to be done? Who's going to do it? By when? At what cost? And this is no more than just a spreadsheet of steps in chronological order. And you're going to constantly update that of the steps that I have to start my business. So here's just a little example. You don't have to follow this. You could do your own, whatever you'd like. But the steps here, you list the steps that you have to do in order to start your business. Who's going to do that? Whether it's you or somebody else. When are you going to start it? When's it going to be completed? Supposed to be, and what it actually is, and how much money is that going to cost me to do that? And some notes out here could be you could prioritize these, you know, like 1 and 3 and 6 or whatever it is the critical things, and I got to do that. That's really critical. Although I'm going to do this in order, I got to make sure that I get started on 1, 3, and 6, maybe ahead of time even. So you could prioritize these, but have your steps that you're going to have to do in the process of starting your business. And you're constantly updating this. And even when you're in business, you may want to do this. It says, okay, hey, I got to go expand my business, but I got to go talk to X. I want to go to get my Google listing. I want to go and advertise. I want to get in a new product line, whatever it is. And you get into the habit of making it. So some people say, well, I just keep it in my head. It's impossible to keep all those things in your head. Write it down. And when you write it down, you actually use a different part of your brain. And you have multiple places then in your brain where they're all acting in your behalf. Summary, remember what we talked about? You got to find a customer problem, no business. How am I going to do that? I'm going to provide solutions to that problem that the customer will pay for. And he feels or she feels that they got more value than the money they gave you. They're not going to give you more money than the value. You say, ooh, this is really neat and it's worth the money. They're going to keep paying you. So increase the number of overjoyed customers and you're going to be in business forever. Keep expanding that. And I emphasize overjoyed, not just happy, but overjoyed. Because when they're overjoyed, they're going to tell other people. They want to look important. And they say, man, let me tell you about this outfit I just had come in and do X. Boy, am I happy. Well, boy, that's exactly what you want because that is the cheapest advertising you could possibly get. And it's also the most effective because people are hesitant. But if they have friends who say, hey, this is a great outfit, you're in great shape and your company is going to keep expanding. What kind of elements do I have to have? I have to have passion and commitment. Remember I mentioned that why down the lower right-hand corner of the planning, the lean canvas on success. If you don't have passion and you don't have commitment, strong enough why, you're not going to stay in business. I have to have products and services for customers who will pay for it. I have to have a vision and goals. In other words, what am I going to do? Is my vision to be the biggest or the best or to take care of everybody in the Northeast Heights or the Southwest, whatever it is? I have a vision. And then I have goals. I have step-by-step goals that I'm going to do, and I have to have action plans. So many people have great goals and they sit on them, but they don't do anything about them. You have to have not only action plans we've talked about, but you have to actually make that happen. You're always action-oriented. You're always moving forward. You're going to deliver on your promises because if you can't deliver on your promises, people are going to say, hey, they're not the outfit I want to do. So if you promised yesterday, tomorrow, whatever you promised, make sure that happens no matter what you have to do. And then they will be your greatest advertisers. Comply with legal requirements. I can't tell you the number of people I say, well, we're going to just turn our employees who are really W-2s into 1099s. And that way I don't have to pay for the payroll taxes. Well, you may get away with it in the short run, but I have to tell you, the regulatory people have a saying, and that is you're going to pay me now or you're going to pay me twice as much later. And when you pay later on, you're going to pay penalties and interest. And the things I've seen oftentimes is the penalties and interest add up to as much as the original amount. So if you want to cut corners with regulatory people, whether it's taxes or registration or whatever, it could be fairly hurtful. You got to be able to start the business you're willing for. I was a poster child for this last number 7 here, because to begin with, when I wanted to get into business, I did all the research, kind of like what you guys are doing now, and get all the information. And I'm not sure. Well, finally, an event occurred that I had to, and went ahead and jumped in. You can't learn to swim by sitting on the side of the pool. And there's an old story about that, and that is that there was 5 frogs sitting on a log, and 3 of them decided to jump in. How many frogs are left? Well, the mathematicians among you said, let's see, 5 minus 3, that's 2. Well, it turns out there's still 5 on the log because 3 decided to jump in, but they didn't jump in. So you've got to actually jump in the pool to learn how to swim. And so after you do your research, jump in the pool. What it takes to succeed, you have to recognize that persistence is what you have to have. Business is not a sprint, it's a marathon. You got to hang in there and hang in there and hang in there. It's a full-time job. You say, well, I'm just going to start this in my spare time. I think that's fine, but that's called a hobby. And a hobby is not a business in the sense of truly a business operation. There's nothing wrong with hobbies. Absolutely. I think hobbies are wonderful, but they're just not regular business. Don't get caught in this race to the bottom. So many people I've talked to say, well, I know this outfit it would cost them $1 and the competitors are charging $1.50. I'll charge $1.30. Then the competitors charge $1.30. I'm going to charge $1.20. And you can see that race to the bottom will bankrupt you because you will not have enough money to pay your overhead, because out of that 20, 30, or 40 cents has to come your rent, utilities, even your own pay if you want to pay yourself, etc. So make sure that you don't get caught in that race to the bottom price. Don't use excuses. So many people I talk to, well, if it wasn't for this, I'd have been successful. No, just buckle up, persistence, make it pay off. Keep the customers delighted, no matter what you have to do. Now, periodically, I'm a first person to admit, you may run into a customer that is so demanding, so obnoxious that it's time to fire them. And I've done that. Say, hey, things are just not going to work out, and I'd like to recommend one of my competitors. Usually pick the worst competitor, and say, you need to talk to one of my competitors who will take care of you, but I just can't take care of you. Once in a while, you have to do that, but in general, you want to make sure you keep your customers delighted. Stay in touch with them. Why? When we've gone back to the customers that have been delighted and said, hey, how are things going? Do you have any new problems? Oh yeah, I got this new problem. I said, well, let's talk about that. Could I come up with a solution? Would you buy it? Oh yeah, I'd buy it, but it's a different problem. Okay, let's come up with it. And we've done that, and we've been very successful in taking care of them, and they keep them attached to us as a customer because we're taking care of not only their current, but also their future needs. Not to mention the fact that it helps the revenue side as well. Ultimate test, timing. There's a outfit called Idio in California. And what they do is they create prototypes for major companies. Company says, I'd like to come up with X. They have all sorts of people that come in and actually create prototypes for those companies. So the CEO says, let's go back and take a look at what was successful and what wasn't. He says, the companies that got started with our ideas, was it the fact that they had really great CEOs? And he said, nope, some of these weren't all that great. Well, they must have had a lot more money. When took a look, no, wasn't really that much more money. Well, what in the dickens was it? It turned out it was timing. In other words, Facebook hit the market at a time when people were interested in communicating information back and forth. And he started at the university level, which is a group that it worked with very well. But it turned out that the computer arrangements, the communications arrangement were coming at the very same time. So same way with Google. Google wasn't the first to come up with a search routine, but they came up with a search routine which was superior, and they started pushing that and then started developing it with more and more appendages to offer more and more capabilities. So timing is very big. So when you're starting your business, is the timing of your business appropriate? In other words, you don't want to get into hula hoops and pet rocks. So think about timing. Do you have enough capital? capital meaning both startup and expansion. Startup capital, we talked about that diagram where we showed how much capital you're going to have to start up with. Make sure you have to have that capital before you even consider opening up your business. Because if you don't, you're going to start your business and then you don't have enough money to pay the bills and you are kaput. Cash flow. Cash is king. An analogy I use is think of a barrel. To begin with, you're going to put some money in the barrel in the way of liquid funds. And out of that's going to come cover your expenses to begin with. As you get revenue, money coming in goes into the barrel, expenses, money goes out. You never, never, never want to let that barrel run dry. That's the definition of bankruptcy. So cash flow is critical to begin with. We spent, we had very simple kinds of expenses. Our table, our desks were folding tables, our chairs were folding chairs to keep our expenses down. And later on, we were able to buy the stuff on auction and get a really good deal. And that's the way we start. But take a look at cash flow. Cash is king. Make sure that you avoid the high attrition by getting counselors or mentors. Get people to help you, advise you. Now, don't accept what they tell you as gospel and just say, okay, that's exactly what I have to do. No, you take a look and say, I understand your advice and it either is or isn't applicable in my situation, but at least get that thought process to where you can think about it. The big thing is you got to jump in the pool. So my reaction is when you're ready, go for it. Jump in. It is extremely enjoyable. I love business because it's an awful lot of fun to see happy customers, happy employees, and things moving along. And it's just it's a tremendous rush, very frankly. So I really encourage you to go for it. I'm going to open it up for questions. And while you're thinking about your questions, and Anna, if you'd help me with this, with any questions, I'm going to go on and just tell you that there are resource partners for you. Obviously, SBDC, we've been talking about. SCORE, from where I'm at, we've got like 10,000 volunteers across the country, chapters in Albuquerque, Santa Fe, Las Cruces, El Paso, about 30 people in each. Most retirees like myself. Nobody gets paid. We're all volunteers. West, Agnes Noonan does a fantastic job running West over there, which was primarily a women's business center program, but they're now accepting a lot of men, and they have their own incubator. So they have space off of Broadway and Lomas, and so you can even rent space from them. If you're a veteran, make sure you get a hold of Rich Coughlin. They've got tremendous programs. One is Boots to Business, which is an excellent program. I've gone through it for business startups, and they've got a lot of help for you if you're a vet. So make sure you go to the SBDC now for training, counseling, loan application. They are tremendous in terms of helping people, and they've got great counselors there. And with that, we'll go back to questions if anybody's got any questions.
We did have a question come in, and it says, do most startups pay the owner from the start, or does the owner operator wait to pay themselves until the business gets past the break-even point?
That's an excellent point. And I've seen it both ways. It depends on how well you're funded. If you are well funded to begin with, then obviously you can afford to pay yourself a salary. If you are operating on a shoestring, like a lot of them do, I know that they don't pay themselves until they can get enough cash to make sure that they don't go into a negative cash flow. So it depends totally on how much you get to start up with. Now, the high-tech outfits will go for years and years with negative cash flow, and the investors keep investing because the rate of growth is so tremendous that they're anticipating a really big return on investment. So it just depends on your rate of growth as well. But more than anything else, as startups at our level, it's how much money you've got in the pot to begin with, and when you can get to break even. Make sure you plot that break even so that you have enough money in the pot to begin with to make sure that you get beyond break even and get that money flowing in. If that didn't answer your question totally, please come back with another question.
Thanks, Vic. I don't see any other questions. I did just see in the chat, excellent presentation in caps.
Thank you.
Thank you so much for sharing your knowledge and experience. Yeah,
Great.
Vic, Thank you so much. Always such
You're
a
welcome.
pleasure.
Welcome. Hey, and anytime, make sure all of you that are still listening, make sure you get a hold of your counselor or mentor if you have any questions, because there's no sense in you're hitting the potholes in the road that what most of us have already hit. So take advantage of that and take advantage of the training that you have available through SBDC. Tremendous opportunities, and the price is right.
We got another comment here. Yes, I really needed the practical overview of all this. So
Great.
thank you so much for letting us know that.
Good luck with it and go for it.
Thank you so much. With that being said, I'll go ahead and wrap it up. Thank
Great.
you all for your attendance. And Vic, we love having you. You're amazing. Thank you.
Thank you so much. Appreciate it. You have a great one. Bye now.